Finn, GM.
GM, Jack, how are we doing? What's going on? How's things looking in Solana land?
Very questionable. A massive GM to everyone. Welcome back to the SolanaFloor weekly wrap-up, where we chat through Solana's biggest stories straight from the SolanaFloor newsroom. I'm joined, of course, by our senior journalist, Finn, and we're going to break down what's moving the ecosystem, what's just noise, and most importantly, what's actually worth your attention. So, Finn, high level, how are you feeling?
Yeah, look, Jack, I think we've seen better days. Markets are looking violent today and in the weeks past. So things are a bit all over the place. Not sure what's going on so much, but yeah, keen to dive into it and at least rattle through all the amazing things happening in Solana, regardless of whether price is going up or down on any.
For sure. I mean, I'll be honest with you, it's not looking delicious. As you said, we've had a brutal price action week. The charts are saying one thing, but then the TradFi bros are telling an entirely different story in my mind, right? You got people like Michael Saylor, Matt Hogan, Tom Lee, all these big boys saying that this actually might be the bottom. And I feel like we're being gaslit here because Sol's down 25% since the start of the month. So just getting into it now, I'm going to share my screen. We're going to get into the newsletter, but talk me through the sentiment being one thing. Are we actually entering a bear market right now?
Well, yeah, it's always hard to know, right? We always think we're in a bear market as soon as prices go down, and we think we're back in a bull market as soon as prices go up again. Last week, I drew some little TA lines. Obviously, I'm not really a TA wizard by any stretch, but I looked at some of the lines. I looked at the EMA, and I thought, you know what? As long as we stay above 98K, as long as Bitcoin holds above there on a weekly basis, we're probably going to be okay. And the market completely rejected that idea, dropped right below, and now we're actually below 90K as it stands. So it doesn't look amazing. Fear and greed has dropped all the way down to about 15. The crypto market total market cap is around 3.2 trillion. So yeah, a lot of blood in the streets, a lot of bad vibes out on CT as well. So it's good that all the TradFi bros, Hunter Horsley and the gang are saying that it's all right, buy the dip, it's going to be okay. We've got ETF inflows happening. So yeah, that's kind of my read on it. What are you thinking?
Well, another thing that they mentioned is this 4-year cycle idea, right? So let's say Hunter Horsley is correct. And by the way, many other people have said this. It's not just him. Arthur Hayes, a bunch of other head honchos are saying the 4-year cycle is a thing of the past. But in my mind, like, what does that actually mean? Because the way I see it, markets have matured. Okay, we've got a huge amount of institutional capital sloshing around. ETFs are all bullish. Maturity is great. But at the same time, as you wrote last week, we're seeing billion-dollar liquidation days becoming the norm, right? And in my mind, that can't be a great sign. So I guess two ways to look at this. One is we're going to end up applying for a job at McDonald's at the end of next week. The other way to look at it is maybe it's just a mid-cycle brutal shakeout.
Yeah, like there's a few things we could look at there. To say it's a mid-cycle breakdown would be, I think, optimistic. Like Bitcoin's been going up for almost 2.5 years now, 3 years maybe. So the general consensus that if we are towards the end of the cycle, then we kind of only really have one or two nice big bumps up left. Whether the 4-year cycle is a myth or not is really hard to know. I remember around the time of the last cycle in the Q4 of 2021, we were saying the same thing. We were saying there's never been as much institutional adoption as we've had now. The outlook has never been better. Institutions are pouring in. It's different this time. And we've talked ourselves into exactly the same position this time around, where we're saying, look, we've got ETFs, we've got institutions pouring millions in per day. And we've always told ourselves that this time is different. And at the moment, it's not really looking like this time is actually different. So yeah, that's kind of my take on the 4-year cycle. I think it's looking like it's playing out as it always has. What's your feeling there?
Well, one thing, I guess, a parallel that I sort of thought of when I was reading into your stories is it's giving late stage meme coin mania Murad vibes in a way, where it's like a lot of people that were very heavily invested, a lot more invested than, let's say, the average follower. You got these people trying to convince the rest of us that have a little bit of conviction, don't sell. It's just a bit of panic, a bit of a shakeout, and we're all eventually going to get magically rich, and it's coming very, very soon. So I feel like we're being gaslit, but I'm sure we have bullish catalysts. Do you get that feeling?
Yeah, I think the comparison to Murad, the meme coin messiah, is a bit different to what we're seeing from Hunter Horsley and Michael Saylor and all the guys clipping millions. And
I'm being facetious. Yeah, for sure.
I think it's a lot easier to believe in Bitcoin when it's down 40% than SPX 69,000 when it's down 80%. There's a much more tangible asset, there's a much more proven asset, And there's plenty of reasons why we'll go back and see new all-time highs in the future, I think.
Absolutely. Fingers crossed. So I want to get to the next story that you wrote here. Aside from all the market-wide despair that we're seeing, degens on leverage. You covered Solana's perp scene over at the SolanaFloor print side of life. So we're looking at a new record here, $65 billion in monthly trading volume in October. Now, on paper, this sounds insanely bullish. But in the newsletter, it's mentioned as well that it smells a bit off. Looks like it could be a mixture of genuine interest, some real demand, maybe a heavy dose of points goblins going a bit feral. What do you think?
Yeah, so first of all, shout out to Ario. He's our SolanaFloor data analyst. He whipped up this report. Yes, on paper, look, it's great. Solana's ailing perp scene, which is really looking to find more players and attract more volume to keep up with the likes of Hyperliquid, is seeing record all-time highs on monthly volume. But unfortunately, that is being almost entirely driven by what I believe to be airdrop farmers wash trading on Pacifica. So Pacifica is a newer perps DEX. There's nothing wrong with it. It's a good product. It does what it needs to do. But almost the vast majority of the volume going through Solana's perp DEXs are going through Pacifica. And the thing that stands out is that while Pacifica's got the highest volume amongst all Solana perp DEXs, it's got far and away the lowest open interest. So difference being that volume is what's recorded every time a position opens or closes. Open interest shows you how much value is open in positions, so open trades essentially. And the fact is that Pacifica has got about less than 10% of Drift's open interest, despite having more volume. So that tells us that most of the perps volume on Solana at the moment is just mercenary capital going between itself back and forth. So, great to have more volume. It's probably not going to last as soon as Pacifica packs up that incentives campaign.
Should we be concerned about this? Like, I guess in my mind, even though it's inorganic activity, when you see these huge headline numbers, surely that attracts some capital. And in my mind, it's platform revenue, it's network revenue, and that has to be a good thing, right?
Yeah, like there's an argument that having more volume and having more liquidity on these perp DEXs actually gives them better execution, makes them better places to trade. So I guess the issue here is that apps need to make sure that they're sticky enough to retain usership and keep being interesting for traders beyond when the points campaign finishes. So we'll have to keep an eye on that and see what happens after Pacifica winds down these incentives.
Interesting. All right, let me pivot back to Wall Street here for a second, because this part's, I think, A, really interesting, and B, really messing with people's heads. As we mentioned earlier, we're seeing some great news coming out. We've seen $500 million in the Solana ETFs now. Zooming out for a second, I guess, for context, the SEC came back online. Great. Immediately green lights a bunch of Solana ETFs. Also great. You've got Fidelity, VanEck, Canary, Marinade, all these big names coming in. Also great. But then Sol is absolutely nuking, right? As we mentioned, 25% down on the month alone. So is it simply that the OG Bitcoin sellers were selling $885 million and that sort of tanked the market overall, and now they're running out of steam and eventually things are going to flow back into Solana ETFs? Or is it a bit of a pipe dream that December could see a bullish momentum revival, specifically around Sol ETFs? You've been digging into this. What are your thoughts?
Yeah, so the first thing that stands out to me looking at ETF volume is that Bitwise is still far and away seeing the highest influence and has attracted the highest AUM. While it was great to see the lights flip back on in the White House and Chair Atkins get back to work and kind of give the green light to 3 more ETFs, the inflows on those new ETFs has been pretty disappointing. So Fidelity and VanEck have both only seen around 2 and 4 million in inflows on their first day's trading. I think we were expecting a lot more than that for Fidelity especially. So yeah, it's disappointing. The institutional ETF investors weren't necessarily buying the dip like we were hoping they would, and now all eyes are turning to Franklin Templeton, who's kind of the last big large scale ETF issuer who could kind of step in and stem some of that bleeding. What's your feeling about ETF sentiment right now?
Well, for a long time, we've interviewed a few of these ETF experts as well, right? And they've turned around and said it is inevitable that many millions of dollars are going to flow into these instruments. We're now seeing XRP ETFs also attracting a bunch of information. But if you zoom out, the reality of it is that everyone sort of expects a clear sort of laddered system with these ETFs in my mind. And eventually the biggest fish in the pond, BlackRock also launches an ETF in everyone's favorite asset, whatever that may be. And then sort of you're off to the races a la January 2024 with Bitcoin prices. And I think it went from like $40,000, $43,000 all the way to like $100,000 in the space of 12 months. So I guess in the absence of a BlackRock Solana ETF, as you mentioned, we are waiting for Franklin Templeton. But then, the question that pops into my mind is, what if all of that happens, and we're, in the depths of a bear market? Then, like, surely we run out of steam, right? And that's an image that I don't really want to hold on to. That, like, we need BlackRock, we need Franklin Templeton. I'm sort of having a bit of difficulty, sort of accepting that that's our fate.
Yeah, and the BlackRock thing is funny, right? Because BlackRock issuing a Solana ETF is kind of like Trump launching a meme coin. It's kind of, there's no higher ceiling we can break within that certain sector. I think if anything, the recent approvals and price action has suggested that the ETF approvals were actually a sell the news event. There's a lot of speculation that might be the case, and there was a lot of hope that these tremendous inflows would bring in tremendous price impact as well. That hasn't been the case. So now we are in a very much a wait and see period. It could take a few months to let these inflows kind of settle in before things start really ramping up. But yeah, it is. We're in a great period of flux, and we shouldn't have to wait for Franklin Templeton to bail us out. The asset should kind of stand on itself, and buyers should probably step in. So yeah, tough times for the market is what I'm seeing.
On the other hand, you've got all these, TradFi bros going on CNBC Money and saying this is a generational buying opportunity. If you're into BTC, if you're into ETH, if you're into Sol, but you haven't quite wanted to dabble because you didn't have, let's say, regulated, clean access to these assets, now you do. And with this recent price crash, some of the big names out there, from Bitwise, from some strategy, the Tom Lees of the world, are saying this is a generational buying opportunity. So maybe it's not too bad. Maybe it's just temporary shakeouts. Now, I want to switch back to your newsletter here for a second, because this was an interesting one. Bit of a trenches focused story here. Pump Fund's mayhem mode. The headline is fun, extractive, or just bad optics. Now, again, obviously everyone's favorite launchpad here. The impression I get here, they've launched an AI agent, and it's sort of spraying volume and liquidity around some random coins, hoping for a bit of a trend revival. But the response on CT so far is less than kind. Some people called it, one more effort to revive the struggling Solana trenches. So give me the rundown here. What exactly is going on with Mayhem Mode?
Yeah, so you hit the nail on the head there. Mayhem Mode is essentially Pump's latest new product. It's an AI agent that trades emerging coins on the bonding curve and just basically tries to inject some volume, inject some liquidity, and inject some vitality into a lot of these coins on the bonding curve. So it is, in my view, it's kind of just a way of artificially inflating what's going on. Like some of the criticism has been that it is completely random. We go from having player versus everyone coins to PvP coins, and now we've got PvP versus Pump Fund's proprietary bot as well. So there's a lot of bad PR going on there for Pump at the moment. Additionally, the bot itself is actually sitting on an unrealized P&L of about 200K at the moment. So yeah, it's hard to look at it and say that this is being a real net positive for Pump. A lot of backlash, and I feel like this has been a bit of a flop as far as a new product goes. But the great thing about Pump is that they've got such an incredible war chest that they can kind of do whatever they want, right? Like they can try things, they can make mistakes, and they're allowed to just have things that don't work and pack up without really suffering too much from that.
Yeah, and one tweet that I'm seeing here in the article is, Jack Duval called it actually embarrassing. I'm not sure it is actually embarrassing. We've been talking about Pump Fund a lot. They're trying to innovate. They're doing their best. They're spending some of the money back on the ecosystem. So a few months ago, there was this whole story about, they extracted $700 million from the Solana ecosystem, and they're not really doing too much to give back. I would argue this is a pretty clear example of them trying to do things, trying to innovate. So I'm not sure I agree with this take that it's actually embarrassing. But I guess if you're the incumbent and you're expected to launch something and it's immediately expected to be a success, then I can sort of see where this guy's coming from. But what do you think? Are they going to keep launching new things? Are they going to keep experimenting with launch pads? There was the whole live streaming bonanza that they went into for a while, but that seems to be sort of dying down. What are your thoughts overall on this sort of corporate strategy?
Well, first of all, I agree. I think it's probably a bit of a stretch to say it's totally embarrassing. Like, it's an experiment. I think this one has fallen a bit flat. It hasn't necessarily worked, but that's what experiments are, and Pump's got the ability to keep trying these things and keep innovating and keep testing new things out until something eventually works. So Yeah, they'll be pretty happy just to shrug off this criticism the way they always do. They're going to keep pouring millions in buybacks back into the pump token. So yeah, pump's going to keep doing pump things. They'll brush this off and they'll come back with another new idea before we know it, I think.
Agreed. All right. Now this one, real chef's kiss, made me giggle actually reading it, because you got some of these so-called serious capital allocators. It turns out they're quietly farming points as degen as the rest of us, right? DeFi Dev Corp, by the way, legit Solana that. Shout out to those guys. Very serious players, helping push Solana into the mainstream. But jokes aside, they are now allocating part of their treasury to farming points on Loop Scale. Great for DeFi adoption, maybe, but part of me wants to think this is great news. But I've got a bit of a question mark in my mind, Finn. What's going on here?
Well, first of all, I think this is a great little story, right? Because it tells us that DATs, for all their, for all their TradFi suit token, for all their millions of capital, DATs are just a bunch of guys who also have crypto wallets. So they can do all the same things that we can do. They've got idle capital sitting in stable coins, and they said, you know what? Let's put that in Loop Scale. Let's get, our 10% yield on that and get some points as well, because, maybe we'll get an airdrop one day and we can convert that into Sol and boost our Sol per share that way. So my knee-jerk reaction was like, oh, this is a bit desperate from a DAT to be farming points. At the same time, it's a good use of capital. If it pays off for them and they end up outperforming the other DATs by doing so, more power to them. It really gives us kind of an indication of what DeFi Dev Corp is doing different to all the other DATs, because all the other DATs run their validator, stake their Sol, borrow more. Like it's a very simple flywheel, whereas DeFi Dev Corp is actually being a bit creative, and they're stepping out of the box and they're trying things within Solana DeFi to really maximize their holdings. So yeah, fair play to them. Happy to see it.
Power to you guys. Do more DeFi stuff. That's what we want to see. Back to your little newsletter page here. Now, we've been talking about aggregator wars for a while. It's sort of coming back onto this. I feel like we didn't stop talking about it too much, but as much as it hasn't died down, you've got Jupiter, Betis, Ultra routing. There's a Titan and D-Flow angle here too. Unpack it for me. There's a lot happening.
Yeah, so earlier this week, Jupiter distanced itself from the Metis router. Metis router has been one of Jupiter's oldest swap algorithms for a very long time. It's the one that got integrated into dozens, if not hundreds, of apps across Solana for their own swaps. And what ended up happening was that Jupiter's competitors were able to use this API to give perhaps unreliable quotes on what Jupiter's best price actually was, and then place themselves as a better competitor above that. So Jupiter has gone for a bit of a guerrilla tactic, and they've actually completely separated themselves from Metis. It's no longer a Jupiter affiliated product, so that now competitors can actually no longer use that to say that they're better than Jupiter. While on paper Jupiter has distanced itself, it is worth mentioning that if apps still want to keep using the Metis router, they need to stake 10,000 Jup. So I suspect that Jupiter is still overseeing that to some degree. But yeah, that's the story in itself. As for aggregator wars heating up, we've also seen D-Flow flip Jupiter in daily DEX volume for the first time in history. So while that shows that obviously it's great, steel sharpens steel, and we're getting a bit more competitive there. The fact is that while D-Flow flipped it on one day, it was back to just 6.6% of market share the next. So it's not exactly a sustained change, but it's just good to see that competition is there, nobody is safe, and that all these teams are working to essentially give Solana traders the best fills possible. So good to see.
Overall competition, we like it. And speaking of competition, obviously all these stories have been competing to get into your weekly newsletter. So we have an honorable mention list here. I'm going to give you a second to sort of zoom through all of them. As much as we want to fit 25 stories into the newsletter, it's just not possible. There's too much happening in the Solana ecosystem. Now, one of these stands out. I'm a bit confused about it, but run through them all for me, and then I'm going to ask you a few questions, Finn.
All right, let's get into it. So, honorable mentions: Jupe flips ChatGPT, tops the US App Store. Jupe is a lookalike comparison shopping app, and on launch day, it flew right to the top of the App Store. So awesome to see. We love to see Solana-based apps doing well in the real world and breaking out of our bubble. We've also had Cash App has announced it will integrate Solana-powered stablecoin payments in 2026. Supergroup has unveiled the first ZAR stablecoin for South Africa, so good to have Rand on chain as well. Axiom and Vanish have teamed up to enable private trading, so nobody can see your swaps. It's another great tool for the trenches. It's going to make it even more vicious out there.
We love it.
Exponent Finance has open sourced its code base, and this is really cool because one of the big criticisms from ETH culture is that Solana doesn't do enough of this. So really great to see Exponent Finance, laying down the gauntlet there and opening its code base to the world. Magic Eden has announced buybacks using 30% of revenue. Good on you, Magic Eden. Good to see you joining the buyback meta. 30%, a bit less than what we're seeing from others, but you have to start somewhere. Solstice, the emerging Solana native stablecoin, has hit 300 million in TVL. Fantastic. And finally, we've got a bit of a MetaDAO slew of announcements. Ranger Finance has acquired Volta and announced its ICO on MetaDAO. There was a few people saying that Ranger's not going to be doing any airdrop with those points. I think there's a bit more details coming about that, so hold tight if you're feeling cheated. And otherwise, Solana Labs received $102 million in commitments in its MetaDAO ICO, but then capped the sale at $8 million, gave a lot of that back. Now, this actually caused a bit of a stink on Twitter. A lot of people saw that some new accounts on Polymarket were able to trade the committed amount market on Polymarket and basically run off with hundreds of thousands of dollars. And people started calling it a rug. People started throwing all kinds of slander at MetaDAO because of this. My message to those people would be to just read how it works, see that MetaDAO has actually got nothing to do with Polymarket markets. So yeah, if you think that MetaDAO is rugging people just because someone made a lot of money on Polymarket, you really need to read the docs a bit more and find out.
That's a very interesting story that I do urge people to go digging into. It was so quick in this space, I think, to call something a rug, but it's a free market. So if you want to go and gamble on something reaching a threshold or not reaching a threshold, that's not necessarily a rug. So there seems to be a little bit of disinformation out there. I urge you to go into it. Very interesting story. But what's really sticking out to me, Finn, I find this quite confusing, is Dupe flipping ChatGPT for the top US app in the App Store. As you mentioned, great. We love seeing Solana-linked, Solana-affiliated projects out there. But I get the impression that it's basically just allowing shoppers to save some money. And in an economy which might be sort of facing a downturn at the moment, I'm struggling to see how this flywheel is actually going to end up bringing any value on chain. I will put my hand on my heart in a bit. I haven't tried Dupe yet. I'm not sure if it's available for EU-based customers like myself. But do you understand how the sort of mechanism works? Can you say confidently that it's going to bring any capital on chain?
Yeah, look, and it's hard to say. You and I, we're both Euro poor, so we actually don't have access to this app to see how it really works for the average user. I looked into their docs a wee bit, and not a lot of it is actually on chain, to my understanding. They have a token, they have a flywheel, and the token is used in their words as the grease of the flywheel that rewards shoppers and incentivizes suppliers to list their products and market their products. So on paper, that sounds good. I don't think it brings a whole lot of value flow on chain. Maybe it puts some money to buybacks to pump the price of the Dupe token. But I don't think the app itself is built on chain, and I could be wrong. But yeah, it's more just exciting to see an app with a token breaking out of our little crypto bubble and kind of seeing success and seeing adoption in the real world.
Absolutely. So if you are based in the US or North America, but I imagine the US specifically, go try it out. Let me know in the comments if it is actually bringing any value into the Solana ecosystem or on-chain generally, because I am genuinely concerned that it's one of those marketing things, but I'm probably going to end up eating my shoe on that. It probably does have some sort of value accrual mechanism. Now, Finn, my favorite part of your newsletter is where you share the stat of the week and you share a tweet of the week. So let's start with the stat. This one looks like it's quite interesting. There's a bit of a volume, TVL to volume ratio discrepancy here. What's going on?
So first of all, shout out to KV. He's one of the researchers at Temporal and Harmonic. What this tweet is showing, I believe it's the OR liquidity. So Humidify, which is a prop AMM, we've spoken about it before, has listed OR. And as you can see, there's 34K in TVL there, and it's doing over 2 million in volume. So compare that down to the Orca Whirlpool, which has 1.6 million in TVL and has done 1.9 million in volume. It's just a ridiculous multiple on capital efficiency. So that really shows how great prop AMMs are at giving people the best possible prices. So yeah, it's a great indicator of what prop AMMs will continue to do as they continue to grow.
Absolutely. We'll be keeping an eye on that for sure. Now, state of Solana in a tweet. I feel like we've been talking about BSOL and Bitwise and Hunter Horsley quite a bit in recent weeks for obvious reasons. They launched the most successful ETF of the year, bar none. So talk me through this tweet.
Yeah, Hunter Horsley, CEO of Bitwise. We're talking about him a lot. Thank you, Hunter, for giving us so much great material to discuss on the weekly wrap up. Since the launch of BSOL, Solana prices have been down almost every day. Is that bad or good? Well, if you want to see new investors in the space, it's good. Better prices, lower cost basis, chance to get in at prices they felt they missed. Indeed, BSOL has had inflows every single day since launch amidst this market. There's a wave of new investors coming into the space. It's just getting started. So as we said, if you are a ETF issuer, you are just licking your lips looking at the SOL cratering prices, because you can now go to all your clients and say, look, here's this thing that everybody wanted 2 months ago when it was $250. Here we are, it's 140. So you're getting a generational entry onto one of the greatest assets of the year. You know, that's
Absolutely.
perhaps some hyperbole, but that's the way I'm reading it. Whether that plays out to be the case is yet to be seen. Obviously, you and I are both very bullish SOL long term. Short-term price action is just noise. The fact remains that Solana is still the best layer one. It's the most performant layer one, and it's the most fertile ground for building meaningful blockchain apps. So that's the thesis we're going to stick to, regardless of whether the price goes up or down at the end
Absolutely.
of the day.
Once again, shout out to Bitwise. If I'm not mistaken, I saw a tweet coming out about half an hour ago saying that they've reached now 600 mil in inflows. Is that accurate?
I'm not sure. If you saw it, I'd say it's probably true.
I think it was. I think it was 570, 530 or something this morning. They like tweeting regularly. So once again, most successful ETF launch of 2025 by none. Congratulations. And Solana continues to be the most fertile place to build businesses. So, Finn, that's all we have for this week. Thank you for sharing. Thank you for keeping us informed. And if, for anyone listening, you want Finn's full breakdowns and his spicy hot takes every week, then head to SolanaFloor.com. Subscribe to his newsletter. It is delicious, and you will learn a lot. Finn, see you next week, mate.
Jack, thank you so much. It's great to hash it out, and we'll see you again next week.